Good morning, everyone, and welcome to the Financial Juice Live morning briefing with your host, Tony. So I wanted to start off today before we go through the title of Mind the EPS, and before we go through earnings that we're expecting this week. UK Johnson coming back out of hospital after recovering from coronavirus. He says, though, that it is too risky to relax the coronavirus lockdown yet. So even though he acknowledges that you do have companies that are struggling to keep up with the loss of business, he's still saying that we shouldn't be impatient, and that actually we should stay under lockdown, and that the government will continue to try and support those businesses in the best way possible. Now we have surpassed 20,000 deaths, which is so for the estimate for the UK was looking at the best case scenario of 20,000 or less, but in this situation that we have here, because we went into lockdown quite late, or a bit late, now we're seeing we've surpassed those figures and we're moving on upwards in the mortality case rates due to the slow government reactions. So again, it's not a positive sign for businesses that we may stay under lockdown. My prediction is that, again, at the end of May, we'll probably likely come out of lockdown properly. But again, if the UK and the Foreign Secretary Dominic Raab is also saying that it wouldn't be a good idea to bring the UK out of lockdown, and there has been no decision made yet for May the 7th, then again, it's a negative sentiment for the UK. Now, if we took a look at the charts, just to have a look to see where we sit at the moment. Okay, so what we can see, if we look at the cable, this is what we see at the moment. So we are seeing some movement towards the upside. Let's zoom out a little bit. So we're not seeing any significant downside movement or any pressure building up on the cable at the moment. Still trading at one spot at 243 and around that level there. If we looked at a smaller time frame chart, again here, let's go to a minute timer. Okay, all right. So Sunday night, if we just have a look here, is where we saw some movement towards the upside as UK Johnson was released from hospital, and then we see this continuation of movement towards the upside. And again, now the pound cable is currently holding steady at the moment. But as I said, positive reactions from the pound here as UK Johnson has been released from his coronavirus self-lockdown within the hospital and recovering from that. Other bits of news as well that I wanted to go through with you guys. So if we take a look at the next article, so from here, Reuters article, oil prices skid on oversupply and storage concerns. So oil prices fell on Monday on concerns about scarce storage capacity and global economic doldrums from the coronavirus pandemic. Now, remember, the Cushing area in Oklahoma is nearly filled. It is at 70% capacity, is what they have said already in Oklahoma, and some traders and also some analysts, economists are saying that the rest of that 30% is already on lease, which is not a positive sign for US oil markets. And we'll have a look at the charts before in a short while. But again, what we're seeing here is that because capacity is going to be reached quite soon, is some economists are predicting that by May we would have reached we would have reached full capacity, which is not too long away by the end of this week, then that's not going to be a positive thing for oil prices in futures. So, and let's have a look. So June's WTI contract price fall may have been triggered by investors moving to later months to avoid a similar fate, with a front month contract trading at a lower than usual volume. So if we looked at WTI crude oil here, and we just bring that up. So here we go. We just look at crude oil futures here. I'll get up WTI. Okay, all right. So June is where we currently are at the moment. So this is where we currently sit at the moment on June contracts for WTI crude oil futures. Again, we are seeing that continuing movement towards the downside. But then if we go to any other days as well, and if we have a look at other months, so July, let's have a look at July. So July, again, here we go. So July is trading a little bit higher, but then what I'm expecting and what people in the market are expecting is that if we start trading in higher timeframes or looking at other months later in the year, we would expect some level of stability or a bit of a resurgence in demand for oil. And that is where we can start to see later contracts such as July trading higher. And if we looked at, if we just had a look at August as well. Okay, so this is what we see for August. This is where we currently sit. Again, prices trading higher, and if we move to and you get the image, so on and so on. The longer we'll look into the months within the year for WTI crude oil futures, the higher the price is going to be, and the more market stability that there will be within those contracts. So, U.S. oil futures led losses, falling by more than $2 a barrel on the fears that storage at Cushing, Oklahoma could reach full capacity. So US WTI intermediate crude oil futures for June fell to over $2 or 14% to $14.52. Okay, so other than oil futures, let's have a look at some more news as well. So one of the key things that I wanted to go through with you guys, and before I show you chart of the earnings per share, comparing that to the .com crash and also the global financial crisis back in 2008 or 2007 to 2009. 12 reports of earnings just to watch out from companies this week. So Apple on Thursday, Tesla 29th. We've got Microsoft as well on the same day, and Amazon on the 30th as well. Let's we'll have Boeing, and then we have AMD, Gilead Sciences. Now, Gilead Sciences, if you remember, they had their first trial of the remdesivir drug, a drug that has not been proven to defeat the coronavirus, a malaria drug, and actually saw a hit in its stock. So again, Gilead Sciences, will they take another hit, or would they have already been priced in the stock market? Again, just to keep an eye out for Gilead Sciences. AbbVie as well. That's also that might be quite key to see what they come up with. If they come up with an alternative to a coronavirus drug, and how long will that take them? Will they be seen as the higher up compared to Gilead Sciences in regards to producing trials? Again, that's another thing to wait and see. Facebook as well on the 29th, Twitter 30th, and so on and so on. McDonald's, Starbucks, these are all the big earnings per shares, earnings that we have coming out this week. So it's going to be quite interesting to see what the effect of COVID-19 is going to be on these stocks. Now, one of the things that I will just bring up here for you guys to look at, I'll just bring that up for you guys. Okay, so this represents the drop in 12-month forward outlook for earnings per share. First of all, during COVID-19, and also then the global financial crisis, and also the dot-com crisis as well. So off the bat, what we can see is earnings per share for Japan had dropped the lowest by minus they dropped by 0.60%. And if we have a look at the US back in the global financial crisis, back in the US, we have a look here. So again, a movement of lower, or a drop by 0.30% during the global financial crisis. Back in the dot-com crash, again showing negative movement in earnings per share. But here's the interesting thing: COVID-19 has already surpassed, or what we can see, has already surpassed the dot-com crash levels of around 0% to minus 0.10% of a drop in earnings per share. And what we can see here is that we haven't received these earnings as of yet. The banking earnings, some of them have not been so great. We did have Deutsche Bank coming out this morning, beating market expectations as well. That's off the back of people moving their money towards these banks, and also taking out loans as well from Deutsche Bank as well. So again, does that present the whole market sentiment from the banking earnings that we had before this month? No, as again, we've got to see how these companies are affected by, one, being closed down, two, having to furlough workers as well, and then finally, how do they manage with not being able to provide a service? If you're usually a company like, let's say, Starbucks, and you have people that come into your store to interact with you and interact with your products, a coffee and biscuit. But as we're looking at the overview here, this just presents us the image as to what we're seeing so far. Now, we're not getting towards now earnings per share. We're not getting towards for the US, as we've seen. We're currently sitting worse than the dot-com crisis, but we're not as bad as the global financial crisis. Again, global financial crisis, as it had a more longer-term effect on markets, and that was a true recession there, because of the actual fundamental effects of the economy were damaged. Okay, now here the fundamental effects of the economy here is that you're not seeing that. It's more of a everyone shut down, GDP is going to slide. That's an obvious thing. Okay, that's what everyone can see. So here are the base case scenarios. One, you have these companies providing their earnings per share and them coming out negative, and you can see a much more negative reaction compared to the global financial crisis as a worst case scenario, where these companies have dropped the ball, and you've seen earnings per share drop off. Okay, that's the worst case scenario of the effect of COVID-19. So you'd expect lower earnings per share reports, or really low earnings per share reports from those big companies. Just remember, it's usually the small companies that are hurt first in a recession, and then it's those bigger companies that when bigger companies start getting hit and they're starting to eat away into their profits to stay afloat, then that's where you start to see real recessionary talk happening. But again, is this a normal case? Is this a normal scenario for a recession? It's odd. It's completely different. This is a completely new situation. So the best case scenario is one where you see earnings per share drop by a little bit, but not as much as we have seen compared to the global financial crisis back in 2008. So again, we're much more further ahead in compared to the dot-com crash, but again, you'd expect in the best case scenario, you would see some low earnings coming out, but you wouldn't see, you'd hope for those earnings to rebound later within the year as companies start to come back after being put under lockdown. The US is still looking for May the 1st as a reopening date of their economy. And it's mostly been Republican states that have wanted to reopen their economy as well. Now, that could be a positive thing for companies. But so from that positive case scenario of opening up your businesses again and seeing slightly lower earnings per share, but not too low, and then you see a recovery in those businesses. On the flip side, from that scenario, you get a really negative scenario where you see a huge rebound in the number of coronavirus cases. Okay, you start opening up your economy and you're just starting to peak in the coronavirus cases, and you'll see, and the measures are being effective, and then you reopen the country, then what can happen is as I said, you'll see rebounding cases, and then you would have to close businesses for a lot longer. You'd have to close businesses for a lot longer to wait for the coronavirus to finish its sweep of the nation. So again, those are so that's a negative case scenario. Now, a positive scenario, we're coming out with a lot of scenarios here, okay? Now, if these businesses come back online and they input practical social distancing measures between their workers, then we could get to the point where you can see a continuation of a positive market sentiment and earnings per share coming back up to where these businesses had expected them to be before pre-corona, or near enough towards as close as they can to pre-coronavirus levels. So again, that's a really optimistic scenario from my point of view there, from what I can deduce or take away from what we've seen so far from China. Okay, China's data wasn't great, and it is only likely to recover. Maybe the next couple of months is when we're going to start seeing some slightly positive figures. We'll still be in the negatives, but we'll start to see some slightly positive figures coming out in the next couple of months. Now, for the US, again, whole different case scenario. It depends on what the US does, whether or not they reopen their economy up by May the 1st, and then we'll see what happens. Will these earnings per share become in the next quarter, or whenever the next earnings are expected? Will they be even worse, or will they be okay? And that's something that we've got to kind of wait and see. But I've given you my base case scenarios of what could happen to these earnings per share, so you make that judgment there. All right. Okay. Let's have a look at some other news. Okay, just some other bits here then of what we do have. So Goldman Sachs says that the narrow breadth in the S&P 500 is a bad sign for stocks. So this continues on from when we were talking about the earnings per share, right? So what they say is the narrowing gap of winners in the S&P 500 doesn't bode well for future performance of US stocks, according to Goldman Sachs, ticker GS Group Inc. Now, this is where we kind of see where we're sat at the moment. So this shows us percentage points as to how close to what the market breadth looks like here. So if we're above the percentage line here, as we can see right here, then it shows that there are a lot of winners within the market, and that the market is in a rally, right? But if we start getting below, if we start moving below this line here, and as we can see this in particular line here, then we can see that there are a lot of companies that are losing out or not performing so well, and which is leading to if we drop below the average, then it leads to a bear market as to what we could potentially see and what we have seen at the moment compared to in last month. And we'll look at the US futures first before just after this image. But again, this is something just to keep in the back of your mind as to where we sit. If we've dropped below our average market breadth, okay, of our 52 or percentage below 52-week high, then it doesn't really bode well for us here. And again, as I said, if you're talking about earnings per share, think about which companies would be affected by going into lockdown. A lot of companies, but also technology companies as well, they can be affected. You can have, such as, you remember Amazon. You've got a lot of people jumping to use Amazon, so you may expect their earnings per share to be much higher than expected. Netflix, you've seen their earnings per share being much higher than expected, as the number of users jumped online compared to their forecast of around 8 million, and it actually came out that there were 15 or over 15 million people that subscribed to Netflix. Then you've got to also think about the losers, those car manufacturers, okay? Toyota within the USA has not been performing so well. Tesla, again, that's also not been performing so well, as the social distancing measures mean that they can't really reopen their factories as much as they'd hope to, or keep them up as much as they'd hope to. So again, you've got to think about who the market losers, and airlines, Boeing being beaten around, like a rag doll in the markets because of the loss of demand for airlines. Hotels, okay, those are the sort of things you've got to think about. What are the best case scenarios for these companies? Who's being affected the most, and how long will they be affected for? So this is where we're currently seeing at the moment in 2020, where we're dipping below. We've dipped below the average, and we could continue to see that movement, or we could continue to see that decline. And that's the dot-com crash, or that's around the dot-com crash right here, is where we've seen the market implode, and then that's where we currently sit at the moment. So if we had to look at the charts, just have a quick final look, and then let's have a see what we're looking at. So if we're taking a look at US futures, this is where we currently sit. Again, testing that level, which is becoming a bit more important now, as we haven't really pushed past this level of resistance at 2,881, or around that level there. Again, can we see a movement through that? Can we see any movement piercing through that level there? Again, in the best case scenario, if we see these companies reopen and they input effective social distancing measures, and they're able to redeem the profit or revenue that they had lost during the lockdown, then again, that's a positive case scenario for US futures, and you would see a movement towards the upside. Now, here's what we see. Here's on the flip side, though, if these companies reopen and these social distancing measures are not effective, and we see a loss of earnings as well, and then we see another repeat of lockdown measures being put in, or more stringent lockdown measures being put in, then we could see this bit of a rally that we've seen end quite suddenly, and then we'll see a movement back towards the downside there as well. Those are the two possible case scenarios as to what we can see for US futures. Okay, all right, that's your market morning briefing. We don't have too much coming out today. We do have the Dallas Fed Manufacturing Index, and other than that, there isn't too much. Only at night do we have the Eurozone unemployment rate, and that's it. Okay, all right, thank you very much. Enjoy the rest of your day, and see you soon. Oh, and don't forget to like, share, and subscribe to the channel, and keep up to date with what's going on. So every morning, 7:15 a.m. Eastern Time is when I do my morning briefings. Thank you very much.